NBFCs generally are doing well, and Sonia has been pointing about to Bajaj Finserv as well. The housing finance sector separately has got a boost. The SEBI yesterday announced that debt mutual funds can put a little more money, actually an additional 5 percentage points of their AUMs into housing finance companies. Raghu, the Executive Director of Repco Home Finance, joins us now. Repco is up 2.2% on that note. Raghu, good morning. Thanks a lot for joining us. Does this mean a lot of money? You will be able to sell more CPs to them? How will this rule affect you?
Definitely, I think there's a welcome move for companies like Repco Home Finance, who have been of late into the borrowings through money market instruments. And this additional exposure of 5% on the debt instruments of, at least like housing finance companies whose instruments are rated AA and above. It's a welcome measure, and I think we should be in a position to raise more resources through them. And secondly, since it's a slightly long-term fund for us, it's welcome for all the housing finance companies, and that should help us in our sort of raising resources in the coming year.
Okay, Mr. Raghu, can you tell us what percentage of your borrowings currently comes from the capital markets, and because of this new rule, how much could it go up to?
See, as of now, as at the end of December, we had 11% of our borrowings through the non-convertible debentures and another 3% through the commercial paper. And since this market provides a good opportunity, I think we should be in a position to increase this limits over a period of time, given what is going to be the pricing of these instruments. If it is competitive, we should be increasing it from the present 14%, I think definitely higher than that.
How does this compare with bank loans? Because over the last 1 month, especially after the RBI policy, yields have gone up, but bank MCLRs have fallen. So what is the difference in cost for you?
See, I'll tell you one thing. The last issue of CP, which we raised for somewhere around 7.10% or even less than 7% mark, we have raised CPs. And as far as the bank's MCLR are concerned, they are still hovering around 8.35% and 8.5%. I think to that extent, definitely this is comparable and much cheaper for us. And depending on the fund's position, we'll definitely utilize this opportunity.
So this additional 5%, can you tell us how much could it really release into the system in terms of total funds?
Well, it may not be I don't have a estimate as to how much funds are available to mutual funds, but one thing is sure, because the savings pattern of the public has changed. Now, they are more into the financial sector investments rather than the real estate or gold. I think as there is a lot of funds are available with these mutual funds and asset management companies, I think fairly a large sum should be available from them. And secondly, because they also have, sort of scheme exposure of 35%. I think all these things for a company like Repco Home Finance, which is a new entrant, we are nowhere near the cap. I think we still have a lot of opportunity to raise resources from these mutual funds.
Okay. Raghu, since we have you with us, I also wanted to ask about the repayments during the demonetization quarter. It hit you all hard. Have things improved? Will you post lower gross NPLs this quarter?
Yeah, I think we expect to post a lower NPA during the current quarter, but it may not be, the demonetization effect is still continuing. It could take maybe a couple of quarters, like this quarter and the first quarter of the next financial year. I think because the overall economic improvement is also required for the self-employed segment. You know that Repco Home Finance has a large exposure to the self-employed segment. And it's because of that, and we are confident that we should be in a position to reduce our gross NPA level during the current quarter itself.
In the loan book, I wanted to understand from you, what has the growth been post the demonetization impact in the non-salaried and the salaried segment? I mean, where are you seeing higher amount of respite?
See, as far as the growth is concerned, it has been more or less uniform between the salaried and the self-employed segment for companies like Repco Home Finance is concerned. Though, we have estimated right in the beginning itself there could be a slowdown in the growth because of this demonetization. And that has been reflected in our Q3 performance, where we used to post a growth of around 25%. We have shown a growth of only 21% during the third quarter of the current year. And we expect probably the same trend to continue during the current quarter before we actually pick up business in the next financial year.
Okay. Well, if you can just leave us with about half a dozen numbers that I was wanting. You said your home finance business grew by about 20% in the third quarter. What will be the annual run rate this year? And what will it be next year? I'm just trying to gauge the underlying momentum of growth.
Well, I don't think there'll be a point to give this thing or something like that. We expect the business or the loan growth to be somewhere around the level which we have experienced during the third quarter, during the current financial year. And during the next financial year, probably we hope to get back to previous year's levels of around between 20 to 25% growth.
Okay. And how will margins pan out on an average for this year compared to last year?
I think as far as the margins are concerned, we should be fairly in a position to reach the level what we have been maintaining during the last couple of years. And as a long-term objective, we still have that net interest margin of around 4% or a spread of around 3%. So there could be some minor deviations in that, but I think we should be in a position to work around that because of the reduction in the cost of funds.
All right, we'll leave it at that, Raghu. Out of time. Thank you very much for joining us